Hey, everybody. Welcome to the morning market briefing. It's Wednesday, January 28th, 2026. And it is Fed Day. Ben's already choked up about it. We're struggling here. We made super producer Hicks, who's back in the saddle. We needed an extra 3 seconds of grace before we get started this morning. There's a train going on. Did you guys notice the train when we walked down here? Over there, that train has been going all morning, it seems like, and it took me quite a while to get from the kids' elementary school back to here because people were real anxious and therefore just blocking my cut-through street, and that train's still going. So, tough times. It's Fed Day. Let's talk a little bit about some of the action we're seeing on various aspects of the Fed, Ben, and we're going to look at Kalshi on some of this stuff. But starting off, the obvious news of the day is, will anything happen with rates? I don't think Kalshi's pricing anything interesting there, and nor would we expect them to. But interestingly, they do have odds on other stuff as well.
Yeah, I mean, I think this is just going to be a fascinating conference because I think everyone kind of knows what's going to happen in the Fed meeting and that they're not going to lower rates. I'm curious to see what they do on their QE program, which is definitely not QE, but it definitely is because they're buying treasuries. So I'm curious to see if they continue to go at the pace that they are or if they reduce that as they improve the liquidity at the Federal Reserve. The other things that Powell's going to be having to talk about, and he won't talk about any of this in the prepared remarks, but he will be asked about it, I'm sure. And that is, he attended the Supreme Court hearing with Lisa Cook last week, so I'm sure he'll be asked about that. I'm sure he'll have a comment about being served. And then he'll also have to talk about the pressure from the Trump administration and being independent. I'm sure he'll have a question on that. And then, of course, his replacement. Question is, does he favor someone to replace him? Or will he plan to stay on as just a member of the Federal Reserve after his chairmanship expires? So all things that'll be watched, none of which are really meaningful and none of which is a decision that he has to make, but people listen to him. And so I'm curious about that, but really no change in interest rates expected. There's one factor that I am curious about, and that is if Governor Waller dissents, because if he dissents, I think that he immediately becomes the favorite. The administration has really they haven't cooled on Rick Rieder. I think they would like Rick Rieder, but they acknowledge that it might be tougher because of his BlackRock ties, getting him through Congress. We've already seen the Trump administration lose a lot of goodwill with even the Republicans in Congress. So getting him through a confirmation process would be difficult given the BlackRock and Larry Fink ties. And then beyond that, Rick Rieder donated to Nikki Haley in 2024. He donated to Buttigieg and another Democrat candidate in 2020. And then he donated to Jeb Bush in 2016. Notably, he's never given a dime to any of the three Trump runs.
That's interesting.
So it'll be interesting to see if Trump views him as a loyalist. I'm sure he doesn't view him as a loyalist, which is a little bit of a red flag. But we've also seen for him.
Yeah.
But I think for as much as people say Trump tries to surround himself with people who are very loyal to him, he's also,
look where Marco Rubio is. Yeah. I mean, those two were bitter enemies. I mean, Rubio was a staunch never-Trumper coming out of the 2016 Republican primaries.
J.D. Vance.
Yep.
So I think that, Trump does have a short memory in some of those things.
On the odd side, you mentioned Waller. Will he dissent in the January meeting? He's at 57% right now on Kalshi.
There's an arb potential there because yes. I do think if he dissents, I think that he's more likely to be the Fed chair, and right now there's only 7% chance of that.
Yep. So
I would short the dissent and buy him as Fed chair.
As we talk about it, I mean, this is real time. We're moving markets. He just jumped to 72% chance. He was at 57% when I read that sentence. He's now at 72. So, I mean, moving markets here on the morning market briefing. On Lisa Cook, right now, really what you're looking at is the odds of when she is out as a Fed governor before March of 2026. Only 4% chance. So I think people rightfully given, I don't want to say morally, in a moral sense rightfully, but I don't really have a judgment on that, but rightfully and correctly perhaps is the better word, not really expecting that to come to fruition. And then the chair odds right now, I'm trying to pull those up, but I'm lagging.
For the new Fed
chair.
chair. I think Reader's at 48, Warsh is 29.
Yeah.
Hassett
Reader's
might be back at
47,
8.
Warsh 29, Hassett 7, Waller at 7. So those are kind of the ones to keep an eye on. But yeah, I think it's a little bit of a non-story as it relates to Fed Day itself. But I mean, there are so many stories going on with this. Interestingly, I mean, it's been a relatively quiet couple of days from the Trump administration. Obviously very active in change of key for them as it relates to DHS and ICE involvement in Minnesota and kind of rethinking that strategy, but not a lot of news coming out.
I think there's been a lot of – so Trump did speak in Iowa last night, but kind of there's been a real theme of de-escalation.
Yep.
And I think that this is necessary because I think they realize that they're losing people and they're losing the base. Mm-hmm. And I think that that's a concern for them. Minnesota, Trump said the government's going to de-escalate. And he even said that bottom line, it was terrible. Both of them were terrible, but referring to both of the shootings from ICE officers. So that's what's going on there. Obviously, there's leadership changes that are involved. South Korea, he announced on Monday an increase in tariffs from 15 to 25%. But last night he said we'll work something out with South Korea. So the tacoing, the Trump always chickens out, is happening at an incredibly fast pace.
Yep.
I mean, we're going to be in a if the tacoing happened any quicker, we'd be in a place where he's basically saying one thing and then immediately discounting exactly what he said, which I could see Trump doing.
Yeah. I'm sure he has.
Maybe we will. Maybe we won't.
Yeah, we'll just have to wait and see. I'll decide. Give us the old I'll decide. Yeah, the South Korea thing, very, very quick movement. Here domestically, Amazon laying off 16,000 corporate jobs. They are saying, hey, this isn't the new norm, but certainly a major restructuring known as Project Dawn.
It is remarkable. We just got done talking about Lisa Cook. And Lisa Cook could be impeached by Congress. Congress basically hires her. They're just nominated by the president. So there is a different kind of hierarchy there. But it is interesting. You go right from that and having a Supreme Court ruling on whether anyone has the ability to fire her to an email saying 16,000 Amazon employees are fired.
Yeah.
And that follows UPS yesterday doing 30,000 and Amazon in October doing another 14,000. And all of these are corporate jobs. So, again, companies are doing more with less. I'll tell you this right now. Amazon doesn't expect sales to be down this year.
No.
And yet they're firing people. So I think this has been talked about for a while. I do think we're getting to a point where we might be at peak layoffs. You know, people get back from Christmas. You didn't want to do it right before Christmas. So you say, okay, we'll get to January, and now we're going to send the tough emails and start our year of efficiency. And I think that that's what we're seeing at a number of companies. We saw it at Coca-Cola. We saw it at McKinsey. We saw it at BlackRock. Now we're seeing it at Amazon. And so I do think we're kind of in that realm of peak layoffs. This won't impact the unemployment rate for some time because it'll just take a while for people to actually get their papers and not have a job anymore.
Yeah, they're giving them 90 days to try to find another job within the company.
Yeah. So, I mean, they have time. But I do think this will potentially result in an uplift to unemployment. But bear in mind, unemployment works on a lag. And so I think that you'll continue to see really strong economic growth even while unemployment goes up. And I would just caution anyone at the Fed who's watching the unemployment numbers and freaking out about them that unemployment is a lagging indicator. Remember, in the global financial crisis, I believe that we peaked out in unemployment in like 2010, end of 2010.
Yep.
And I know that when I was applying for jobs in 2010, unemployment was still over 10%. I mean, it was famously above 8% going into the 2012 election. And now we're at 4.5. So that's where we are on that.
People starting the year, we're starting to see some of that money. We've talked so much, Ben, about the just trillions of dollars in money market funds. We're starting to see some money come off the sidelines. Trump accounts have been a part of that. Intel's the latest company to come out and say, hey, if you open one of these and you get the Trump account contribution, we'll match it for employees and their families. I think there's going to be an ongoing trend of that. That seems like a pretty easy win for a corporation or even a small business in some instances. But we're seeing some actual activity.
Yeah, I mean, I think you've seen it in a number of companies. I mean, Dell famously did, the Dell family did $250 for every kid, basically, in the United States. And then you have a number of other companies saying we'll match it. I think either Blackstone or BlackRock said that, maybe with Blackstone. And then now we have Intel's announcement, and it's a way to curry favor with the administration. I'm sure they'll get a mention in the State of the Union address. But also I think it's a way to curry favor with employees. So I would, but from just a financial sense, what this means is that you have money that Intel had money on the sidelines that is now going to be deployed directly into markets. And it's not, importantly, it's not going into consumers' pockets. What it's going into is their investment accounts, which means it's going into the stock market. And so when we talk about money on the sidelines coming into the market, this is what we're talking about. I mean, the Japanese had a super strong 40-year bond auction. This is a entity that people were being like, they're going to default on their bonds. And now we've gone from 420 to 390 on the Japanese 40-year bond. We had exceptionally strong bond auctions here in the United States. A lot of that money is getting redeployed because people realize that money market fund yields are coming down and they need to get more yield.
We are seeing, continuing to kind of discuss U.S. dollar weakness. Trump says he's not concerned about the drop in the U.S. dollar relative to the euro or the pound. This is a positive, though, Ben, for U.S. exporters, and given the overarching economic priority that he seems to have, whether it's through tariffs or trade deals, et cetera, I'm not surprised he doesn't have a problem with it.
Yeah, and I think it's a way for companies to offset tariffs as well. If you have I just think this is a very interesting development, and it's a way that the tariff noise can almost kind of filter out because the tariff is absorbed almost by the currency movement. And so it's an interesting financial market dynamic when you do have that domestic currency weakness. And I do think that it plays a role in absorbing some of the direct hit of the tariffs.
We got a really wonky, I would say, consumer confidence reading yesterday. We are essentially at a worse level than we were in COVID from the consumer side. There seems to be an awful lot of political fatigue, and I can certainly relate, but people talking tons on the survey about tariffs, about trade, about politics, about the labor market. They see things as quite bleak, and yet they plan to spend even more money on things that they want versus things that they need. They're going to go out to eat more. They're going to travel more. They're going to take care of their pets more. People are acting in a way that disagrees with their general mentality.
And I think it speaks to the idea the silent generation they're fine, with things. Gen X and the boomers are the most despondent. They became the most despondent going in from December to January. And I think that's a direct result of them just reading the headlines in the newspapers saying this Greenland stuff is crazy, the ice stuff is crazy. Because financially, they're doing as well as they've ever done.
Yep.
Unemployment is low. Their income's as high as they've ever been. And their 401ks are as high as they've ever been. But they just see the headlines and, become despondent and say this whole thing's, I don't know when. I mean, we've heard it from clients and other people. Is it, I don't know when this is going to blow up, but it's not going to end well. You have that knowing, just like, it's not going to end well.
I mean, it underscores a point I've probably made 10,000 times on this call over the last 6 years, but the most politically unpopular thing you can say is the economy's doing well. Nobody likes to say that. Nobody likes to hear that. It just flies in the face of every headline you read.
And I wonder what these people might say who are very negative and unconfident. I wonder if they would say, I get that, but just wait.
Yep.
Do you think that's
I mean, we saw like bringing this back hyper locally, and this is a bit of a half-baked thought, but Tom's not here, so somebody's got to do it. And we saw an excellent example of this, I think, this past weekend with the weather. For those not in the loop or not living in the South, I mean, we had basketball games, which, as a reminder, basketball is a sport that is played indoors. We had basketball games canceled at 9 a.m. on Saturday. It was 45 degrees, dry, and sunny. Because people were just so freaked out about the weather. They just knew it was coming. We had, hardly any ice on the road at any point over the weekend and into Monday. Schools were out Monday. And Sunday night watching the local news, the meteorologists were just absolutely beside themselves with the lack of bad weather. People were frustrated by it. We live in such an environment in which people really cling to those headlines. Decisions are made based on those headlines, and then the reality is something totally different. And people didn't like it either way. And people weren't rooting for bad weather; they weren't rooting for power outages. But there was this kind of an air of disappointment when none of it happened.
Yeah,
people.
Yeah, completely. I was disappointed we didn't get snow, but I think people were really kind of, hungering for
calamity.
The drama,
yeah,
of it all.
Let's do a quick whirl around on earnings. Talk to me about the tech sector.
Yeah, we'll start there, and then I have a quick comment on Starbucks, and then I think AT&T is very interesting as it relates to inflation. But on tech, semiconductors are really starting to in a big up cycle. You got memory chips that are the interesting thing on the memory chips, and this is great for the memory chip companies. It's not so great for the other companies. So memory chip prices are going up a lot, and so ultimately, how this is going to end is memory chip companies are adding capacity, which is good for the equipment players, and that'll come in and increase supply, and I think you'll see memory chip prices come back down to earth. This is what history tells us about the cycles. But in the interim, for companies that sell devices, especially at the lower end, memory costs are going to significantly ramp up as a percentage of your bill of materials. So if you sell a lower end Android device that's trying to compete with an iPhone, your margins are going to be smashed with these memories. So you're going to have to raise prices, but because your consumer is opting to purchase your product because it's at a lower price, so they're incredibly price sensitive. The elasticity is incredibly high, and so what they're doing is they're dramatically pulling back on build rates of these lower end Android devices, and so that's hurting people. So you have this cascading effects of these higher memory chip prices. So that's something to watch. It's certainly hurting a company called Qorvo today. But again, I don't know if this actually impacts Apple so much. I do think that they will pass price increases through in the next iPhone iteration. Although maybe in the short term they will get hit. But usually what Apple does is they are so big they can strong arm suppliers into much better deals than their competitors can get. If you're a kind of independent Android device producer, you're really getting smashed. So that's happening on the semiconductor cycle. On Starbucks, this is a really interesting quarter. They've been trying to do a turnaround for the last 15 months with the new CEO who came in from Chipotle, and they posted their first positive transaction quarter in the United States in 2 years. And so what the big takeaway there is, it's gaining steam. The consumer also is not in a terrible spot. But what they're doing is they're leading with transactions. They're not leading with pricing. I remember when pricing at Starbucks was always like 6 or 7 or 8% a year. It was insane. It was 1%. And that includes all the additions and that's average ticket. So that includes like all the ads for like protein cold foam and like all these things that they've added over the last 6 months. and you've actually seen only 1% price growth. So I don't think inflation is a big deal. And actually, they said, the costs from higher coffee prices and tariffs, those are going to filter through in the first half of the fiscal year. Q2 ends in March for them, and they said in the second half of the year they'll actually see margins improve. So the stock's actually doing quite well this morning.
Yeah, up about 8%.
So it's we are seeing some companies who can really do well. And the last company I want to talk about was AT&T. We have some charts on this, but basically AT&T is not really getting a whole lot on the phone side. So if we look at the postpaid upgrade rate, so I look at this first as a way to get and Jonathan, maybe we have that postpaid upgrade rate chart that we can share. We don't. Do we have any of the charts?
No.
Okay. So we have none of the charts. Basically,
We'll tell you about them though.
The not really seeing a whole lot of movement there. We are seeing people switch a lot more. So this year, 0.98% of consumers switched in Q4, which is much higher than the 0.85 from last quarter. So the phone business is not doing well, and you can see that in average revenue per user. Average revenue per user is actually down on a year-over-year basis at AT&T. And this is the second quarter in a row that's been the case. So we're not seeing inflation there. So what they're doing is they're having to be creative, and when they're getting growth is on the wireline segment, which is their fiber business. So they're getting a lot more connections there, which is helping to scale. So all of that is very interesting, because essentially you have a company that is wired to increase prices, and they can't increase prices. So what they're having to do is figure out another solution. It's also not good for Comcast. But when we talk about companies that have entrenched moats, and this is the key, when you're talking about companies that have an entrenched moat and have always historically been able to get pricing growth, and always meaning the last 5 to 10 years, that is being eroded. The rent-seeking opportunities are eroding, and they're eroding fast. We're seeing this in healthcare.
Yeah.
We're seeing this in utilities. We're seeing this in telecom. And so this is an area that we're really trying to make sure that we've de-emphasized in portfolios, because rent-seeking behavior is a cost to cut, which is totally different than anything that we've seen since the global financial crisis.
Good stuff. I like that analysis, Ben. Thank you. We'll wrap it up there. We'll be back tomorrow. Y'all have a great day. Talk to you soon.